Hello, everybody. I'm excited to start my first webinar of the day where we're going to be focusing primarily on buyers. So I'm not sure how many people will sign up for this and be able to join us here at 10 a.m. in the East on Saturday, but I am recording it and I will be uploading it at a later date and time to my YouTube channel. So it can always be viewed in perpetuity. It looks like we do have some attendees in here, so that's kind of exciting. So to have several people signing up and jumping in, but without further ado, let's go ahead and get this ball rolling. So, and go check out what we have to offer. So let me share my screen with y'all. Been working all week on the PowerPoint to make sure that I provide you guys some information, some documents. Now, as someone that has signed up in here, is it having trouble here getting the thing? Hold on one second. Let me get to it. Very, very excited to be able to start this webinar. I think home buying is something that's going to be important, help you guys build wealth within your family, where we are in life. There we go. So, but without further ado, let's go ahead and start. Ready, set, own. Fast track your path to a new home. So I will be your lovely host for the day. My name is Tim Veigle. I am a realtor with Watson Realty. Been doing real estate since 2014. A little bit about me. So I grew up in Casselberry. I attended Sterling Park Elementary, Tuscola Middle School, and Lake Howell High School. I worked as a bagger slash cashier over at Goodings Supermarket, which for those that remember Goodings, I'm sure you love that store in the area. For those that don't remember Goodings, it's where the Bears furniture store is right now beside Crunch Fitness. I graduated from UCF with a degree in marketing. I was also a member of Alpha Kappa Psi, which is a professional business fraternity. I still volunteer with them to today. As far as work experience, outside of Goodings, I was also worked at AT&T in the call center and later as an assistant sales manager over in Waterford Lakes. I started my real estate career with Watson, like I mentioned earlier, 2014. Now, as a realtor, I think it's very important to be involved locally. So I do have some local involvement. I'm a member of the Casselberry Chamber of Commerce, past president during the pandemic, and I'm actually currently on the board and their membership chair. I ran for office, Orange County Soil and Water, back in 2020. I did not win, but I did get over 100,000 votes. And then Casselberry Commissioner, I did run. Unfortunately, didn't win that one either. Got 1,000 votes. Smaller election though, so still was able to get probably about 32-33% of the vote with that 1,000. I served on the Casselberry Firefighter and Police Pension Board. I'm also currently serving on the Casselberry Planning and Zoning Board, serving on the Seminole County Public Schools Business Advisory Board. And then also I've assisted with Living on Your Own program, both at Indian Trails Middle School and South Seminole Academy. But that's a little bit about me. Now let's really talk about you. Why home ownership pays, A lot of times there's going to be some people that don't want home ownership. Thank you. I try to be a legend. So there are going to be some people that don't like home ownership because they don't want to be tied down. But at the same point, being a homeowner is the best way for you to build wealth. Statistically proven, people that own their own homes have larger wealth than those who are renting. Many people don't like to be tied down. They don't want to pay a mortgage. Well, you are paying a mortgage when you're renting. You're just not paying your own. So here's a real life example. I helped some sellers, well, some buyers purchase a home back in August 26th of 2014. They purchased it for $176,000. So they then sold it 5 years later for $259,000. That's $83,000 in about 4.5 years. So you tell me, how does that look in your bank account? Now, keep in mind, that doesn't take into account that they've been paying down their mortgage ever since from in the 4.5 years. So the 83,000 is really just a rough estimate of how much equity they've grown in that time frame. So, and that's the thing with home ownership. It's a forced savings account. In 4.5 years, can you save $83,000? Probably not. It's not that easy to do. And so now, when it comes down to buying your home, it really all starts with building your team. Okay, and one of the most important pieces of your team, I guess you could say the puppet master, would be choosing a realtor. You know, you want to make sure you choose the right realtor. That's extremely important. Um, because the realtor is what's going to make it or break it on your job. Okay. So you should get referrals for realtors, people that have worked with them in the past. They're going to know a little bit about them. You should definitely interview your agent. Okay. Now, when interviewing the agent, a very popular question that people might ask is how many or how long have you been in the business? You're going to have people tell you 10 years, 15 years, 20 years. I want to tell you that's the most misleading question to ask a realtor, because someone could be in the business for 20 years, but in that 20 years, what if they've only done 5 deals? Not that much experience. So a better question is, how many deals have you done in the last year, last 2 years? And you're gonna get some people like the average realtor is probably about 5 deals a year. Okay. Um, this is also a good thing. This little snippet I have here comes straight from homes.com. Okay. And from doing that, it'll tell you what a realtor has done. You can look up realtors and see their production, see where they're actually selling homes, and get all the fun information about them. This here is specifically some of mine over the last 3 years. So as you can tell, I do more than the average realtor of 5 deals a year. It'll let you know their trend lines of, are they trending up, or are they trending down? And as you can tell, I'm slightly heavier on the seller to buyer deals. Now, if you're buying a home, you might be like, well, I don't want someone that actually lists homes. I want someone that primarily focuses on buyers, which is completely fine. You could do that. But having someone that does a pretty even kill on both sides could help the buyer a little bit differently. And the reason being is they have experience of what's going on when you submit an offer to the seller. So they can help guide you so that you can get into the home, know what you can and can't do, which way it's probably going to go, give you some speculation of what's probably happening on the seller side. So, but yeah, homes.com is a great resource for this. Other information you should ask is, how's your communication style? What do you like to do? You know, this is going to be a marriage. You're going to want to know everything that you can about each other and make sure that you're a fit, you are a match. And it's fine if you might not match well with that realtor. Going with another realtor is not a bad thing. But it's important, though, to make sure you find the right one. Now, one thing that's also important, if you haven't heard, the rules have changed a little bit with realtors since August. And any realtor you work with, they're going to be asking you to sign what's called an exclusive buyer brokerage agreement. Okay. What that agreement is basically just outlining a contract between you and the realtor, basically putting you in a marriage to where you're going to work together and that you're exclusive to this realtor. Sometimes buyers might not want to be exclusive, but this is a good thing because you want a realtor that's going to work for you, not someone that's going to, maybe I'll help you, maybe I won't. Okay. And then as far as a realtor, no matter which way you look at it, we work to provide a living for our families, and we don't get paid unless you get the home you want. So it's important for us to have that exclusivity with buyers so that we know that we're not going to be jumping realtor to realtor on us. In there, though, it does outline the possibility that you might have to pay the compensation for the realtor because not all sellers will or do pay compensation. From my experience, majority of them have been paying it. But there are occasionally some that won't, which we can, when you submit an offer on a property like that, we can always try to negotiate it in there. It could obviously change the structure of your offer if you're going to have to compensate us anyway. And these are all things that we discussed that's outlined in there. Okay. Moving on. So another important part of building your team is your lender. Okay. You might already have a lender you work with. Your realtor probably has tons of lenders that they work with and they can get you set up on one. And it's all very important to get the right lender. Now, with the lender, and this is why they're probably one of the other most important part of buying a home, is the lender is going to tell you what you can afford. Okay. I know you might be like, well, I'm already paying $2,000 a month in rent, so obviously my mortgage should be $2,000. That's not the way it typically works when you're buying a home. Okay. Lender's going to look at your debt to income ratio and they're going to go ahead, look at your credit score and all that together. They're going to see what you qualify for. And then based off what you qualify for, that's where they come up with your mortgage. Okay. And you might be paying $2,000, but based off the information you provide, you might only qualify for $1,700. So it's going to change the spectrum of that, which is why it's extremely important before you go shopping, you need to find out what you're pre-approved for. Okay. And it's kind of like, try to tell this to my wife all the time. She's got champagne taste, but we're living on a beer budget. So you want to make sure you're looking at the right homes. Because when you look at it, if we think $2,000 a month payment, maybe it's going to get you a $500,000 home, give or take. We go look at it, $500,000 homes, then we come back and find out that you can only qualify for $350,000. Guess what? If you can only qualify for $350,000, then you're going to end up being disappointed after we looked at all those $500,000 homes. So we're going to have to tone it back and look at some of these $350 homes and figure out what you want. But if we would have got pre-approved in the first place, we'd start out on that. So you know what you're looking at, and you're not going to be comparing to those $500,000 homes because there's not going to be a comparison. They're going to have all these bells and whistles that you're going to like and you're going to want, and you're not going to be able to get. Okay. Now, one big thing, and we're going to talk credit score a little bit more detail here in a second, but credit score is a big factor that helps you with what your interest rate's going to be. Debt to income ratio. So, and these are how much debt do you have? How much income are you coming in? And this isn't like, well, I think I bring this in. This is how much debt I think I have. They verify all this information. And then, of course, you get a pre-qual or pre-approval. There's a big difference between a pre-qual and a pre-approval. A pre-qual letter is simply put, you call into your lender, you tell them, I make this much a year. This is what my debt is. And they submit it and they say, okay, you're good. Pre-approval, you provide them documentation proving what you are. And it's a little more of a secure process to where you'll be able to purchase. Now, another thing with the pre-approval, it's important to verify stuff. Because like you as a consumer, you know what you're making, but if you're writing off a ton of stuff, when it comes down to your taxes, you might be take home might be 75,000, but because of what you're writing off, you're now suddenly 40,000. So you 1099 employees out there, you know what I'm talking about. And because of that, you qualify for less than what you're hoping for. Now, one other thing to point out to you, for those that might be wanting to buy that's a 1099 employee, you have to understand that as a 1099 employee, you don't always, you listen to your CPA, they're gonna tell you write this stuff off because their number one goal is to save you money from paying to the government, tax money. However, what they're telling you to do does not benefit you in purchasing a home. So if you're looking to purchase a home, you should start looking at that today. Okay, so that you can start writing off less, pay a little more in taxes, unfortunately, but it puts you to where you qualify for a bigger house. And then once you get into the house, you can write off everything again. So now different types of loans. So there's several different loans out there. We're just going to cover a high value side of it. So you got the conventional loan, just more kind of like almost like a private loan per se. It's not fully backed by the government. You're gonna need a better credit score. Minimum down on that is typically 5%. The ratios that they require is going to be slightly different than what you're used to. But all in all, I mean, it's a good loan. And one of the benefits of it, if you do put down a 5%, you have to put mortgage insurance. When you gain 20% equity, you can always call and ask to get that taken off. Okay, they might require an appraisal, but that's about it. Another loan is FHA. This is fully backed by the government. The interest rates might be a little better than conventional because it's not going to go off the market. It's going to go off what the government says. Typically, you put down 3.5% on that one. Now, if you get 20% equity, the only way to get rid of that mortgage insurance, because it's there for the life of the loan, is you have to refinance. Okay. Then you have a VA loan. This one is exclusive to veterans. So it's a veteran benefit. You can do 0% down, which is great. You don't have to worry about mortgage insurance. It's also backed by the VA. And then there's another one out there called a USDA loan. USDA loan, also 0 down, backed by the federal government, but it's more of a rural loan. So in Orlando, you're not going to necessarily find it. You got to look at the maps. On the outskirts of Orlando, like going to Lake County area, stuff like that, it's a little more rural, you will qualify for that. Now, mortgage insurance. Mortgage insurance does not protect you. When you're not putting a lot down, it protects the bank from you defaulting on your loan. So, all right, let's go ahead and jump a little bit into credit. And I think this is important for you to know if you don't already know. Your credit score. Okay, this is how it's calculated. 35% of your credit score is based off payment history. So make your payments on time. The other 30% is based off the amount owed, the amount of debt you have. That's 65% of your credit score. Then you add on another 15% for length of credit history. Longer the credit history, the better it is. Credit mix is 10%, and then new credit is 10%. And that's going to go up your credit score. Now, the purpose of the credit score is just literally determine how well you manage your debt. Okay. If you stop paying everything and you don't have any debt, you'll end up with no credit score. Can you get a loan with no credit score? Yes. Not every lender does it though. Those basically a little more details are complicated because it's more of a manual process, but it's definitely doable. Okay. Now, we've got you pre-approved. Let's go shopping. Now, when you go house shopping, it's very important to know what are your needs, what are your wants, okay? Needs are stuff you have to have. I need air. Okay. I want air, not next door to a, a landfill. Okay. You still survive with the smell, but you can't survive without the air. So needs, how many bedrooms? So that could be a need. If you have 5 kids, you're probably going to want at least 5 bedrooms. How many bathrooms? 2 bathroom, 3 bathroom. These are things you're not going to basically give up on. Upgrades. Sometimes you might move into a house and you don't want to do the work on the house. So what type of upgrades do you need? Sometimes you might want to do the work because you know you're going to get a lower priced home and you can build up the value. Okay, school zones. You might have a specific school zone that you need for your kids. You want to keep them in, say, Winter Springs High School zone, because that's the school they currently go to. That's where their friends are. Another need might be your commute to work. Do you mind to drive? You want an hour drive to work? You want a 15-minute drive to work? Okay. And then there's your wants. You might want an open floor plan, but you're not sold that you have to have one. You might want granite countertops. Another big want that people have is I want to be a pool. I want lakefront. But you, as the buyer, need to figure this out. Okay. Because if you're not building everything perfect, you're going to have to sacrifice something. You need to decide what that is now. Because if you don't determine that before you really start house shopping, you're probably never going to find the home that you want. Okay. So, congratulations. We found your home. Okay. So, we found your home. So, we find it. We're about to go under contract or going under contract. We got to look at the contract. Okay. One of the first things up is what's the offer price that you're offering. So, as a home buyer, you're going to offer a price. Okay. Say the home's listed for 500,000. You might not want to offer that price. You might want to try to negotiate. That's the way real estate is. You can negotiate. Your realtor is going to look at the comps in the area and let you know where they feel the value could be. Okay. And then you're going to decide what you're going to do. In some cases, your offer price might be, okay, it's 500. I'm going to offer 485. Okay. But now that's not all you could do. Maybe instead of offering off on the price, that's not what you value. You want more money in your pocket. So you might ask for some closing cost assistance. And in today's market, in 2025, we're seeing a lot of people ask for closing cost assistance. $10,000, $15,000. They then use that to buy points to lower the interest rate on their loan. It's not uncommon. Okay. Or you can do some sort of mixture of that. Now, this is a negotiation. The seller doesn't have to accept it, but they might, or they might counter back on that, which is fine too. Again, it's a negotiation. So now on the contract, another important aspect of it is your escrow deposit. The escrow deposit is, this is how much money I'm putting down for you to take the home off the market. So that if I don't fulfill parts of the contract, I'm at risk of losing. Now you're going to have certain contingencies in the contract, which we'll get into, that will save that deposit from going to the seller. But if none of those contingencies fit, you do risk losing your deposit. Now, a typical, what we see a lot, usually about 1% of the purchase price for the escrow deposit. Now, when you go to close, say your deposit's $5,000, you get to closing, the amount you got to bring to closing is 20,000. That 5,000 goes to that 20,000. So now you only have to bring 15. So the money doesn't disappear. It gets applied to the end of the transaction. Okay. Now the inspection period. Typically what we see on the inspection period right now is about 10 days. Sometimes we see less, sometimes we see longer. During that inspection period, You have the right to back out for anything. Okay. This is where you're going to review everything on the contract. You're going to review everything with the house. You're going to inspect the house, see if anything comes up that you weren't aware of, or figure out a bigger issue that you weren't even aware of. You review the HOA documents, also extremely important. Try to find out what's the issue that might hamper you. Okay. And then during the inspection period, you can back out for whatever reason. You can back out because you don't like the fact that the house is under a blue sky. And when you back out during the inspection period, you're entitled to get your escrow money back. Now, the next contingency that's typical in the contracts is what's called the finance contingency. You have a certain time frame to qualify for the loan. If you do not qualify for the loan, what ends up happening is the money, you can back out due to that. You'll usually have a denial letter from the lender, and you could end up being entitled to get your escrow back, which is a good thing for you if you don't get the loan. Now, there's certain dates that you have to follow to qualify or not to qualify. And then, of course, what's the closing date? And closing date's always tough. Like, there's going to be the date the seller wants, there's going to be the date the buyer wants, and then there's going to be the realistic date. Okay. Seller wants to sell, buyer wants to buy. They're going to be like, oh, give me 2 weeks. Well, if you're doing a loan, the lender might not be able to get it done for 35 to 45 days. Okay. So it's important to make sure you line up the dates of when the lender thinks they get the job done. The other side of it is if you fall on a holiday, you need to make sure you don't fall on the holiday. So make sure that happens. So you can't fall on the weekend, has to be a bit normal business day. And then, of course, in the contract, you can also add in other contingencies. Some common contingencies we might see is, and this one is kind of built into the financing contingency, but there's the appraisal contingency to make sure the home appraises. Another one that's popular on here too is contingent on the sale of the buyer's property. So, or buyer's property, yeah. So the buyer might be getting the cash from the sale of their home. So they're going to put their home up to say, hey, us buying this one is contingent on us selling ours. So it's what we like to call a domino effect. I've seen sometimes where you got 4 deals all lined up based off ground zero of the domino effect. So it's important to keep those things all moving in the right direction. Okay. So, and those are some of the basic contingencies that we do see. Now, ta-da! We are officially under contract. As a buyer, this is when things start to pick up. Okay. Right when you go under contract, you need to make sure you submit that escrow, that initial escrow. Typically needed to be received within 3 days. Okay. Now, the way the contract works is let you know days are calendar days, but they're not business days. And they're not just normal days either. So, like, say, for example, you go under contract on Wednesday. Day 1 is Thursday. Day 3 is Saturday. Because day 3 lands on Saturday, it bumps to the next business day of Monday. Now, if we went under contract on Tuesday, if day 3 was Friday, it'd be due on Friday. So that's kind of how the calendar days work. Now, you need to start your financing application. So get everything the lender needs, sign what they need, let them get the ball rolling. The lending part is one of the longest parts of a buyer process. So the sooner they get involved, the better. Okay. And then, of course, you got your inspection period going on, typically 10 days. Schedule inspections, research all the things. You know, we'll talk a little bit more about inspection, but during this period, one of the big things is getting those HOA documents, reviewing those HOA documents. Your realtor cannot tell you should you or should you not buy based off the documents of the HOA. And here's the reason why. They're not going to know everything that's important to you in those documents. They might notice some things that might be concerning to you from conversation, but they're not going to know everything. Things that they might look for is just to make sure the HOA is solvent so that you don't have any special assessments coming up that's unexpected. Okay, I think that's a big one. Another thing that's going to be big in there, really is just looking at the P&L statements. But there are also things that they're not going to know. Like if there's an HOA rule that you're only allowed to walk your dog outside in the public areas on days that are not Tuesday and Thursday, and the only days you can walk your dog or like to walk your dog are Tuesday and Thursday, there's an issue. The HOA might have a rule that says you can only have 50-pound dogs and you have an 80-pound dog. You know, these are things that your realtor might not fully know. They might have caught a few things, but they might not catch it as an important thing. So you really need to dive in there to make sure those rules are fine. And at the end of the day, if they're not fine, you need to decide, will I go for it or will I not go for it? Okay. That's the extreme important part of it. Okay. Because if you go for it, it's a good thing. If you don't want to go for it, then you can't go for it. But you can't ask the seller to change the thing because the seller has no authority over changing the rules of the HOA. The only way to do it typically is at an annual meeting where you'll be one voting member. So if you buy in, you might be able to change it, but there's no promises, and the seller has no authority to change it. All right. So also during there, kind of talked about reviewing the HOA docs already a little in depth. But again, typically 10 days, the inspection period. You do the home inspection. When you do the home inspection, you're talking about probably a 60 to 80 page document. It's going to tell you everything you did not catch from looking at the home. Some of the things are just wear and tear. The home's lived in, it's not brand new, there's going to be issues. You just got to decide how big of an issue is it, and is it concerning enough that you're going to want to walk away. You don't want to buy a money pit, but you also don't want to just freak out because there's a scratch on the wall. The inspector is going to give you an idea of how big of an issue things could be. And that's extremely important to know those things. Okay. If the roof needs to be taken care of and that's $15,000 expense, that might be an expense you don't want to do or an issue you don't want to deal with. If there's a foundation issue, that might be something to freak out on. So little things like that. Now, if there's a septic or well, also another good thing to get an inspection on. Septic is one thing that we won't know there's an issue because it's underground. Okay. So replacing a septic, you could be talking $10,000, $15,000. And of course, review the HOA documents. I can't stress that enough. Okay, next steps. So again, we already talked about this. You submit all your stuff for the loan application. Now, when you submit everything to the lender, they're going to go through everything. They're going to submit it. Underwriting's going to take a look at it. And then underwriting's going to give you basic list of conditions. The conditions will probably be about 20 deep. Could be less, could be more. Everyone gets conditions. Some of them make sense. Like, oh, we need an appraisal. Yeah, we know we need an appraisal. It's ordered, we're waiting on it. That's a condition that's going to get cleared once that comes in. You need to get homeowners insurance is a typical condition you might see. But they literally go through everything. I had a lender once tell me that the underwriting was going through the bank statements. And when they went through the bank statements, they kept seeing a monthly, like every 2 weeks, a Venmo payment coming out for like $60, $50, whatever it was. And they had to go back to the buyer to ask what it was because they thought it was a monthly bill through Venmo. And they wanted to know what was it legit. And The buyer's like, hey, I have medical marijuana. It's for my marijuana, from my marijuana dealer. Okay, so the buyer had to write a letter of explanation explaining that. It's not in trouble because they're not the law. It's not what they're going to get into, but they need to document why this payment's coming out. Okay, and that it's not a normal bill payment that they did not catch. So you're going to have stuff like that. Um, it's nothing to freak out. They're just trying to clear conditions. It's frustrating, but it's the way it goes. Now let's talk a little bit about the appraisal. So they're working on clearing conditions. At this point, you'll authorize ordering the appraisal. Now the appraisal, and this is important to talk about expense-wise. A lot of these expenses for closing, you pay at the closing table, okay? That's the money you send at the end of the day. When you do the inspection, that's paid out of pocket. Typical inspection for just a regular home inspection is about $500. If you have to do septic well, might as well add on another 500. Okay. The appraisal is also approximately $500, and that's out of pocket paid at that time. So you got to pay it up front when they order the appraisal. Now, the way the lender orders the appraisal, they might not know what the appraiser charges. So they put down an average of what they think it is, about $500. If they charge $450, $50 they'll end up crediting back to your closing, that closing statement. If they charge more, they'll also bill you that at the closing. So, but 500 is usually what I see for the most case, sometimes more, sometimes less. So the appraiser goes out to the property. We're purchasing this property for $500,000. The home appraised at $450. So there's a $50,000 difference. The lender is only going to give you a loan based off the $450. The appraiser or the contract that you have is $500. That $50,000 have to come from somewhere. It's going to come from one of three areas. The first is it's either going to, you as a buyer are going to bring an extra $50,000 to closing. The other option is the seller reduces the price to $450. The third option is the buyer and the seller agree to some terms where maybe the buyer is going to drop the price some and the seller or the buyer is going to come up some and the seller is going to come down some. So, but those are the three that we typically do end up seeing. Now I did get a question of how long does it take to roughly till you get keys? Well, to get the keys, basically once you go to the closing table and you've signed the paperwork, once the buyer has signed the paperwork, and once your money has been wired in and it's all been confirmed at title company, then typically at closing, you'll get the keys and they'll be released to you or your realtor, okay? But until that money comes in and all the paperwork's been signed, the keys cannot be released. All right, so back to the appraisal. But now, hopefully you don't have an appraisal issue. What I have been seeing is that we don't get a lot of appraisal issues today. Okay, but that doesn't change the fact that it could come up in the future for appraisal issues. Now, home insurance. Start finding this early. So when the lender is qualifying you for a loan, what they're going to do is they're going to determine approximately what your homeowner's insurance will be for their debt to income ratios and to figure out what your loan's approved for. They're going to try to, they see the average is 2,400, they might bid you at 3,000. Because it's better to aim high and come down than to be too low and go up. Because if the insurance is more expensive than they expected, it could hurt them. So when you do your homeowner's insurance, most insurance companies are going to require you to provide them with what's called a 4-point. Okay. So you end up going ahead doing your home inspection. When you do your home inspection, they're going to provide you what's called a 4-point inspection. They'll provide you their full inspection, but you'll have the option for a 4-point. The 4-point is what you want to give your homeowner's insurance. Now, the 4-point that you're providing, all that's covering roof, electrical, plumbing, and AC. Okay, there's the 4 main components because that's all the insurance company really cares about. If you provide them the full inspection, your home's going to fall down. They're probably not going to insure you. That's the way they kind of look at it when you give them too much information that they don't need. And so then the homeowner insurance is going to go and provide you information. I have several different insurance brokers that I work with, especially we insure over in Winter Springs. Now, they're going to shop the quote around to see what they can get you the best one. Okay, and then there are different types of quotes. One's an HO3, one's an HO6. One of them, and I get them confused, I think it's the HO6 is one specifically for condos to where they're covering the roof and they're covering a lot of the exterior. HO3 covers a lot of the exterior, interior and exterior. So single family homes, townhomes are typically, I want to say HO3, condos are typically HO6s. So they're going to go ahead and provide you a quote. Now in the state of Florida, we are seeing insurance quotes go up. They're starting to stable off a little bit, which is a good thing. But when we've been getting hit with as many hurricanes as we have, insurance fraud, that's an issue. Also, another issue, insurance companies call our area solo because we are some of the highest insurance fraud claims in the entire state. Solo stands for Seminole, Orange, Osceola, and Lake County. So something to definitely think of out there. But you want to secure this insurance sooner than later. I had somebody that literally was securing it the week of, and it almost cost them the deal. We were able to finagle a few things to make it work, but they were close to losing out on the home because they waited too long for the homeowner's insurance. So definitely, definitely, definitely jump on that sooner than later. Okay. One other thing I want to make sure I touched on. So with insurance, so the insurance does the full insurance. They do the 4-point. They also will do what's called a wood destroying organism or WDO. Looks for termites and other stuff that destroys wood on there. So, and then they also do what's called a wind mitigation. Wind mitigation is provided to the insurance companies. So 4-point and wind mitigation will be provided. And the purpose of that is really to help the insurance company know that your roof is really good and get you some discounts. All right. So moving on, we are almost ready to close. Yes. So as we get ready for closing, make sure you schedule your utilities, electric, water, internet, cable, whatever you're looking for. You want to set those up so that they're good to go for when you move in. Prior to closing, you're going to do what's called a final walkthrough. So your realtor will schedule you with the walkthrough and take you to the home. And when you go to the home, you're going to look at it, make sure it's still in the condition you were expecting it to be in. Now, sometimes you're going to go in there and you might not like the way that the sellers clean the home. Not a good reason necessary to back out because of it being filthy. Especially since that's in the eye of the beholders. The seller, they might have thought they cleaned it really good. To the buyers, it leaves some room. Now, a lot of times buyers are going to come in there and do a deep clean anyway before they move in. But it's something to think of. And I've been in somewhere I had buyers that thought it was filthy, and I looked around, I'm like, it's really not that bad. I've been others, and I'm like, wow, this is disgusting. So, big thing to look for though is if you're supposed to be getting the appliances, are they there? Is the AC working? Is the water working? Like all the basic stuff. Now, it doesn't mean that you won't have issues after closing. Things can happen, but you want to know that things look good when you're about to close. Then you're going to go closing. I recommend bringing 2 forms of ID. A lot of times you probably only need one, but it's always good to have a second one because sometimes they will come up with, well, we want two this time. And sometimes it's because that's what the lender's requiring. State laws could change. It's better to have it and not need it than need it and not have it. So we've closed. Congratulations. You are homeowners. Now, after closing, you're going to want to change the locks. Okay. You don't know if there's any extra keys to your house out there. So you might as well change the locks to ensure that you're good. You're going to obviously get moved in. And then you're going to file for homestead, which we'll talk about a little bit here. But for those that don't know, homestead exemption is a property tax break for homeowners of primary homes. So let's talk how homestead works. And it's a good one to save you some money. Okay. I'm doing this based off of real life examples. So if you are a first time home buyer and you're buying a home, you file and your assessed value is roughly $50,000 less, varies a little. So you buy the $500,000 home, instead of getting taxed off of the $500,000 value, you're getting taxed off the $450,000 value. Now it'll vary based off where you look at, because you got school board taxes, you got county taxes, you got city taxes maybe, and there could be some other stuff in there. Now, if you owned a home as a primary before that, you'll get the homestead, and you also get what's called a portability credit. Okay. And I recently just did a real life example in Casselberry of a portability credit. So, and this is for homes purchased, it was about $370,000 in Casselberry. They purchased the exact same year, same model, everything. So an investor who purchased that home, their tax was roughly $6,400. First time home buyer, so that's a $50,000 tax break. Off of the 370, they were paying $4,200 in property tax. Now, someone who owned a home, sold a home, and then moved, the portability credit for Save Our Home dropped the taxes down to $2,400. So you can tell there's big savings there in tax breaks. So it is highly recommended to homestead your home. It just makes all the sense in the world. Okay, now talk a little bit about some of our sponsors this week. So on Sunday, you got to meet our performance roofing sponsor. So they're a great company. They're honest. They'll come out and check the roof for free. They'll give you an estimate of the roof cost. On there, they'll also let you know if it's a legitimate storm damage. If it is a storm, they will come out and actually meet with the insurance company when they come out and walk the roof with them and help them out so that your claim can hopefully get approved. So if you need any roofing, I definitely think you should go. So insurance, just to let you know, because I got a question on that one. Insurance gets added to your closing statement. So you never make a payment to insurance for the insurance to take effect. The insurance will be set up to take effect on the day of your closing. So if you're scheduled to close, say May 5th, insurance kicks in May 5th. The title company, after closing, they will overnight the check to the insurance company. So you never even have to send them a payment. Okay. But it'll all be taken care of through closing, and it takes effect on the day of closing. You see, your lender, because when you purchase a property, especially when you're doing a loan, your lender is a big portion of this loan. Okay. So they do not want the home not to be insured, because if something happened natural disaster wise, they lose their money just like you. So they require it from the get-go. So it'll be on there immediately. All right. So back to the roofing. This QR code will take you to their site so you can get your free quotes or anything like that. Definitely recommend them checking it out. And if your roof's getting up there, it might be a good thing to start planning for it. Insurance companies are dropping people left and right. The last 4 or 5 years, I've been getting calls from past clients, helping them navigate the roads of roofing because of insurance. A COE home inspection. This was another one that we talked about this week. They are a great home inspection company, very personable. Uh, they're definitely will be there to assist you if you need 4 points, if you need anything like that. So, thank you. I'm glad you appreciate it, Jane. She said this is amazing. So, but they are a good company. There's their QR code. If you need inspection. If you're changing insurance, it's a good opportunity to reach out to them, have them do a 4 point on your home, wind mitigation, have them do one of those. It could save you some money on your insurance if you haven't done that before. So another one, Watson Property Management. Now, granted, this is home ownership. We'll definitely dive more into them when we get to the investment part. But if you do have investment properties, they are a good company to go with. Highly recommend connecting with them. So, um, I'm glad everyone's liking the presentation so far. Getting a lot of compliments. Um, so Mystic Air and Heat. If you have an AC issue, they are a good go-to. They're quick, they're reasonable. They don't try to overcharge you. They're not here to force you to do stuff you shouldn't need to do. They will take care of you the right way. One of the reasons why I love to work with them. So, and there's their QR code. We Insure, here's their QR code. They are a great company to work with as well. So I highly recommend checking them out. Um, oh, did I? So definitely check them out. They are worth checking them out. And there's their QR code. Addition Financial, they are our lender partner of the week. They have a lot of great deals. They really get the job done. If they say you can close beforehand, you're going to close. And they're going to jump through hoops and they're going to do some amazing things. I highly recommend it if you're looking to figure out what you can get approved for. Reach out here. Katie will set it up. She'll get you qualified. Um, and then, of course, if you want to connect with me, here's some information on me. I would love to talk to you. Feel free, send me an email. You know, it doesn't make any sense for you to go into this blind. Let's have sit down and conversation. Let's see what I can do for you. And I definitely appreciate all the feedback, all the questions I'm getting. So, but thank you all very much. And I see a comment on here about the gift card someone's won. Yeah, as far as the gift card, all you have to do is just send me your address and I will get that mailed out to you. But it has to be something that I have to mail. So, but other than that, I hope you guys enjoyed the session. I look forward to hearing from y'all. And as you might be starting your journey to go buy your home, your first home, maybe your next home, I hope it's a good one. I wish you all luck. And if I'm part of it, I'm excited to be part of your journey. If I'm not part of your journey, I'm excited to see how the journey goes. So have yourself a good day. And don't forget, I got a seller session coming up here shortly. Also hope to see some people on there.